Study Objective 5 deals with reconciling bank accounts. Companies use banks to help maintain the validity of their cash balance, make sure that it's kind of a second record of the cash account for a company. So reconciling the bank account is a very important job for companies to do. Now, the bank balance for cash and the company's balance for cash are going to be different for two main reasons. The first one is there's time lags between when something happens for book purposes and when it posts to the bank. And second, there are errors. Either party can make errors, and if that happens, then you're going to have amounts not matching. So accounting for these two types of differences will help you reconcile between the cash balance and the book balance. That's what reconcile means. It just means explain the difference between two numbers. And if you can explain the difference, then you can be comfortable that cash is being maintained appropriately. So basically the procedure for doing a bank reconciliation is portrayed in this image right here, this illustration 7-8. To do this, you start with the cash balances for both the bank and per books. So what's your general ledger balance for cash? So you start with the balance for each one, and then you make your adjustments that need to be made to each column according to what's not in that column that is in the other column. So for instance, adjustments to the bank. Deposits in transit have to be added to the bank balance because they haven't posted the bank to the bank balance yet. So that would be to say that the accounting department recorded some deposits, checks they'd received. They recorded them by debiting cash inside their books, and then they went and deposited the checks. Well, that takes a couple days sometimes for the money to get into the bank, to post to the bank. So if the month end happens in between when those two events occur, then the book balance for cash is going to be higher than the bank balance for cash. So all you have to do, though, to get comfortable with the process is to just add that deposit in transit amount to the bank statement, and then it'll be in both places. And that's the basic idea in reconciling these two cash numbers. Outstanding checks, it's the opposite of deposits in transit. The company's written checks, and they've reduced their cash balance for them, but those checks haven't come out of the bank balance yet. So if you subtract these from the bank balance, then they'll be accounted for in both places. Book adjustments are usually, I should say there are errors too. The bank does make errors, although not very often. Usually there are lots of things that affect the book balance too. Like sometimes lots of banks offer services where they will collect money from your customers directly, so you don't have to get the mail and then deal with the time that it takes to deposit all that. So if a bank collects your money on your behalf, then they'll have it before you even know you got paid. So it'll be in the bank statement before it hits your books. So once you see it on the bank statement, then you'll want to make an adjustment to books, increasing your cash balance. Non-sufficient fund checks, this is when customers write you checks and they bounce. Well, you don't know that when they send the check to you, so you increase your cash account, debit cash, and then you try and deposit them, but the bank learns there's no money in that other person's account. So they tell you about it when you get the bank statement. So you need to make an adjustment to the books to take that money out of your cash balance on your books. There's all kinds of miscellaneous charges that the bank will tell you about, check printing fees or bank surcharges. Those will be told to you on a bank statement. So the bank will have them in their balance before you have them in your balance. So when you get the bank statement, you'll have to adjust the book balance for those amounts. And then, of course, errors. If this is going to be the trickiest part of bank reconciliations for you, dissecting an error that a person made inside an accounting department and getting it fixed is a pretty important part of bank reconciliations too.